And Wall Street extended its rally on Friday, capping off a strong week as major tech names led gains despite ongoing trade uncertainty. The S&P 500 climbed to 7.74% to close at 5,525.21, while the Nasdaq Composite surged 1.26% to 17,282.94. The Dow Jones Industrial Average was muted, rising just 0.05% to 40,113.5. Strong earnings from Alphabet and a sharp rebound in Tesla helped lift sentiment for the week. The S&P 500 advanced 4.6%, the Nasdaq gained 6.7%, and the Dow rose 2.5% despite underperformance earlier in the month. In Europe, stocks ended higher as upbeat corporate earnings helped offset ongoing uncertainty over global trade policy. The pan-European stock 600 added 0.35%, with Germany's DAX up 0.8% and France's CAC 40 rising 0.45%. The UK's FTSE 100 posted its 10th consecutive gain, closing 0.1% higher and marking its longest winning streak since 2019. Asian markets followed suit, buoyed by Wall Street momentum and the signs of a softer stance in US-China trade tensions. Japan's Nikkei 225 jumped 1.9%, pardon me, that's 1.9%. South Korea's Kospi rose nearly 1%, and Hong Kong's Hang Seng edged up 0.24%. China's CSI 300 was flat, while Australia's markets were closed for a holiday. Now, crude oil prices edged higher on Friday, but posted weekly losses as supply worries and mixed signals on trade talks pressured the market. Brent settled at $66.87 per barrel and US oil at $63.02, both down over 1% for the week. Gold fell 2% on Friday, dragged down by a stronger dollar and easing trade fears. Spot gold closed at $3,290.43 an ounce, down 1.2% for the week. Looking ahead, earnings from Microsoft, Amazon, Meta and Apple will be key drivers, alongside any further clarity on trade developments. All right, and for more on this, we are now being joined by Ajay Bagga, market expert, live from Mumbai. Thank you so much for joining us on World Business Watch.
Thank you.
Now, how should investors interpret these mixed signals on US-China trade?
Yeah, it is very confusing and very uncertain. The Chinese Foreign Ministry is saying none of our Chinese officials have engaged with the US administration. But the US president is saying not only that the Chinese are in talks with them, but that the Chinese head, Xi Jinping, has spoken to him multiple times, which the Chinese are denying. And in fact, in a very unprecedented statement, the Chinese Foreign Ministry called Trump's assertions as fake news. So it's very unprecedented for the top two economies in the world to be exchanging pleasantries like this in public. And we don't know where the truth lies.
Right. And with oil and gold slipping, what does that say about the broader market sentiment at this point in the midst of all this back and forth?
See, oil is a question of OPEC plus raising supplies consistently and demand being reduced because of the economic uncertainty. Gold, we have seen it reached an all-time high of 3,500, and then it's taking some consolidation below that. So there was profit booking at 3,500 that set in. But overall, gold, how it moves is it moves up for a couple of years and then it consolidates for 3-4 years at those levels. We saw that in 2020 when it first hit 2000 levels. And then for nearly 3 years, it stayed at within that band of 2000 to 1500. And then it started moving up around September 2023, and it has nearly doubled from there. So we have had a very furious and sharp rally in gold based on demand. Central banks, retail investors in India, China, UAE, and even sovereign funds have been buying gold to hedge against uncertainty. There has been a lot of safe haven buying. As the uncertainty reduces, you could see gold prices correcting. So we would not recommend new gold purchases at these points. You can stay invested for what you have bought. That should go up. But for the next few months, we could see a reversal in gold as the uncertainty reduces.
Right, let's also talk about the Indian markets. Do you see the recovery in Indian stocks continuing in the short term?
Right now, no, because of the geopolitical overhang. So, if you look at Uri and Balakot, the Indian retaliation happened 10 days after in Uri and 15 days later in Balakot. So, we are expecting some kind of retaliation from the Indian armed forces over the next 10 to 15 days. So, markets will be very range bound on that. FIs are investing into India. They have pulled out, foreign investors have pulled out over $60 billion from the US in the last 20 days. And some of that is finding its way into emerging markets. Some of that is coming into India as well. So FIs are positive. That should have led to our markets going up very sharply. But as you saw on Thursday and Friday, post the massacre in Kashmir, there is a lack of sentiment, and that geopolitical overhang will not allow our markets to progress very fast. We will have to have that event go through, and we'll have to figure out how contained is it or how widespread the conflict gets. I think that's what will hold back the Indian markets in the very short term.
All right, but just considering that scenario, do you see Indian stocks rallying to new highs in 2025 at all? And what factors could lead to that? You've touched on that already, but just for better understanding.
Yeah, there's a big chance. There is a big chance we will hit again by the end of the year. One, the tariff issues should get resolved by end of summer and autumn time. We should get some clarity on the tariff issues. Second, this issue with Pakistan. I hope there will be some durable fix brought in for that. If you take those two issues out, then the Indian market stands out as an outperforming market, outperforming economy, growing at more than 6% in real terms. Nominal terms, maybe 9.5 to 10% growth. Corporate earnings growing at about 12 to 14%. So it's an attractive market, fairly valued, not very cheap, but valued according to what it offers. So the chances are that by the end of the year, we should come back to our all-time highs, which were there in September of 2024. So we would have lost 12 to 14 months in a price correction. Time-wise, we would have spent that amount of time, but there's a good chance that by December, we should see all-time highs again.
All right. And Mr. Ajay Bhagat, thank you so much for joining us on World Business Watch with your insights on this.
Thank you for having me.
For latest news, download the WION app and subscribe to our YouTube channel.